us a little bit more about your past. How did you start in venture investing? Where did your past started?
Sure.
Finished Berkeley University of California in '90s. Moved to East Coast and spent over a decade in the world's leading management consulting firms. In 2010 started as angel investor and launched the Asymmetry Ventures group. Returned to California to run one of the biggest angels group in US with 2,000 plus angel investors. Looks at 3,000 pitches and makes 100 deals a year. Wow.
Look, there is no secret that for majority of corporate top managers, but also for entrepreneurs who've been dealing in industrial businesses, and 90% of members of these communities are people like that. Getting up in the morning, they get the feeling that the stuff they're doing is outdated. I know that you have tremendous achievement putting together one of the biggest angel investment syndicate, probably second to Jason Calacanis, famous angel in US, and probably most of your syndicate members are similar to a profile I just mentioned. Can you explain who are the people in California who participate as angel investor with small checks in venture market? Who are these people? What is the profile of these people?
What can I say to describe the typical angel? They usually are, many of them are working day jobs also, but they're working day jobs usually in technology, sometimes in other fields like management or finance. Some of them are not. Some of them are actually not working much anymore because they already built and sold a technology company, or maybe a couple of technology companies. And now they're like semi-retired, meaning that they still work on a couple of the companies, but they don't have to work anymore because they have enough personal wealth. They don't have to work. But what they want to do is they want to participate. They want to be involved in the next generation of companies. So maybe they work as an engineer or a manager at Google or Facebook or Uber, but they want to see the next ones. They've already had a career seeing what it was like watching Uber or Facebook or Google grow as they grew as professionals. But now they want to see the next batch, and they know they can't always go back and become an engineer at the next tech company and then the next tech company. At some point, they need to transition their career. So the way they continue to stay involved is not by being an employee of each new company, but by becoming an investor in those new companies. And you can only be an employee one company at a time, but as an angel investor, you can be participating in the best companies of tomorrow, and you can participate in tens or dozens or hundreds of them.
Three things which immediately send you a signal: fake, say no, and forget. What startup should say and show to you three things that immediately blacklist? And these three things should be very distinct, particular, in such a way that our members now pull out their notepads and put notes on it. Three, the most common indicator that you have a bullshitter and as somebody you should run away and don't spend time on it.
Okay, I have three good ones for you. I think that these three are ones that I would personally rely on all of my deals, and I think that your members could really get some benefit from sticking to these three rules.
Thank you.
The first one is founders who don't understand the technical details of what they're building. So two business founders, so people who have management backgrounds or finance backgrounds, or maybe three, but the core founders of the company come together and they say, all right, we have this thing we want to do. It's a service or an app or some kind of technology that we need to build, we're going to hire an outside team of developers, computer scientists to build it. We're going to contract out, we're going to outsource our development. That is almost always an immediate no from me. Unless there's a very good reason why they're doing that, I think I would be fine with eliminating 100% of those companies, because the whole point of building a disruptive, world-changing company is that you have, as the founder, you have that insight into the technology, that you see that potential in how, if you build the technology stack in a certain way, it can be disruptive and transformative to an industry. So if you don't even understand the technology, if you're a non-technical founder, that is an immediate no from me. Now, that doesn't mean that all the founders have to be technical. It's very common and very powerful to have one technical founder, one non-technical founder, and then they match. But if you have no technical founders on the team, and they just feel in their mind that they can outsource the development, that's an immediate no from me. Number two, if you proceed with your conversation with a founder or a founding team, and you ask them what they feel about a certain situation or a certain scenario. So for example, one of the very common ones is, all right, you're building this thing. What about if then in 1 year from now, Google decides to build a competitor, or Amazon or some big company decides to build a competitor, or maybe a different scenario? What if we decide that the market for this is not as big as you thought, but what if we, as investors, we help you find a different market? Maybe you could go build this instead. Would you be open to doing that? Many founders will tell you, yes, if the situation changes, I would be open to switching or pivoting my model and having the company work on some different problem. That's not the kind of founder you want to invest in. If they are so willing to tell you that they will drop what they're doing, change what they're doing, focus on a different market, either they don't care about what they're building, or they're so desperate to get your investor money that they will tell you yes to anything you say. That's a very bad signal. The best
basically
founders,
stubborn. They're stubborn, right?
You want to find founders that are beyond stubborn, that are ultra stubborn. They are looking at a problem in the world and they are obsessed with that problem, and there's nothing that you or anyone else can do to stop them from solving it. So if during the meeting they're so willing to just throw out their first business and say, yeah, I'll work on this instead if you want me to, you don't want to invest in that founder. You want the founder that will not give up until they solve the problem that they started to solve. And you asked for three, Arkady, so let me give you a third one. Founders that tell you all of their predictions with a contingent statement. Now, for the people in the audience who have done computer science or programming, you'll know the contingent statement. It's an if-then statement. So somebody who's thinking with a contingent mindset, they will say, if we get this funding, or if you approve us, or if we get this license, then we will build this big company. That's not what the best founders do. The best founders don't apply contingent thinking. They apply absolute thinking. They say, we are going to do this no matter what. It doesn't matter if you don't give us funding today, if we don't raise the total funding amount that we need or that we want, we're going to find a different way to do it. So this is something I look for when I hear the founders say, if we can just get this, we'll be able to do this. If we get X, we will achieve Y. That's out for me. I'm looking for the founder that says, yeah, it would be great to get X, but if we don't get X, we're going to get something else that looks like X. One way or another, we'll find the resources to build this. So when I hear that, if we get X, then Y, that is usually a big warning signal for me. I like founders who say, we're going to do it no matter what.
I understood in your syndicates, 2,000 members, majority of the people, they're not only Americans, but they live in Silicon Valley. So very close to what's happening in the market. What, in your opinion, approach should be for a stupid foreigner? By stupid, I mean a person who don't possess full amount of signals, full amount of information to be cheated by the market, by cantankerous founders, by eloquent presenters who tell sweet stories trying to cash out hardly earned dollars for their project. How not to be cheated if you're a foreigner, but you are interested to put bets on Silicon Valley, American-based projects?
I think there are two ways that come to my mind. The first way is mathematically one of the most common pieces of advice in not just in venture investing, but in finance in general, which is diversification. So if you are buying public stocks, so publicly traded stocks on the stock market, if you have 8 or 10 or 12 stocks, that's a decent amount of diversification. With startups, with early stage companies, the failure rate is much higher. So I want your audience to understand your diversification level has to be much higher. So if you have $1 million to invest, don't invest it in 10 companies, right? Invest it in 100 early stage companies. Then you'll have a diversified portfolio. So whatever your budget is for early stage investing, don't divide it into 5 or 10 bets, divide it into 20 or 30 or 50 or 100 bets. And then you have a better chance of hitting the right company. So that's the first principle. It's just a mathematical principle, right? Diversification. When you have when you have an industry or a sector like early stage companies where most of the companies fail, but a few of them have huge returns, diversification is absolutely necessary. Now, that's one principle, but the problem with diversification is if you are starting from a pool of 100% bad companies, meaning you're consistently getting, like you said, Arkady, the scam artists, the low quality companies, right? If you're in the wrong pool in the first place, you can diversify within a bad pool, you'll still get bad results. So for that, you need to figure out what are the signals. And I will tell you, a club like Changer is a good place to start because it's, as I can see what you're doing, you're putting a group of people in front of people who are giving some positive signal in the market. The fact that I spent my college years, so my university years in Silicon Valley, and then moved back 3 years ago to do this full time, I'm focused on this. And look at the big VC firms and see if an early stage guy like me, see if my companies are consistently getting their follow-on rounds done by the big VCs, the world's biggest VCs. So you want to always be looking for that signal. And you don't have to stop and think, oh, we found Rob. Rob is the smartest guy in Silicon Valley. I'm one guy. I'm trying to do my best to find the great companies, but find other people like me and find who I'm co-investing with and work with some of those people as well. And sooner or later, you start to get a pool of signal. And then within that pool, if you diversify, then you've got signal and diversification.
Can you tell us 3 verticals which are the most hottest one in terms of investment in California right now, which we don't know? 3 verticals, the hottest one, but which we have no clue they are. Surprise us, please. I'm sorry for difficult questions.
Okay, it took me a second, Arkady, but I think I have 3 for you. And
no, sure you do. You do. Sure you do.
Well, I think I have 3 good ones. That's coming up with 3 is easy. 3 good ones, that's the hard part. And yes. all of you will know all of these sectors already because they're not new sectors. But let me tell you what I'm seeing that's happening in each of these sectors. And I think what I'll describe is the sector is transforming in a way that not everybody knows about yet. And even people in Silicon Valley, some of them don't realize yet. So the three sectors are biology, computer games, and space. So let me tell you in each of those what I think is happening and what kind of deals your members should be looking for. In biology, there's something happening now called computational biology, which is that in the old way of doing business in biology, you would make a drug, you would try to discover a drug, you would try to come up with a therapy for a disease. And you would do testing in the lab, and then you would do testing on patients, and you would try to find things that will cure disease. With computational biology, you are modeling it from the first principles. You're not starting with 1,000 different drug compounds and then testing them to find one that cures a particular type of cancer. You're using computational techniques. So actually computer science and modeling, spatial modeling, 3D modeling, to predict ahead of time what the compound will look like. And so now that's very powerful because we're merging the power of biology with the power of computer science. I think it's worth taking a risk on some of these computational biology companies because 10 years from now, this is how drug discovery will be done. This is how they will find the next big drug that will cure cancer, that will cure lung disease, that will cure heart disease. So computational biology, biotech and healthcare and medicine startups that are using the power of computer science to discover better treatment. So that's number one, computational biology. Number two is computer games, which sounds like an industry that has been around for 30 years, 40 years. We know that a lot of people like to play games, but there's something very interesting happening now, which I would call the streaming experience, which is that computer gaming is turning into something that's more than just gaming. Computer gaming and video games are turning into the replacement for television. Because now, think about this. If I am a professional gamer, okay? So that means instead of a rugby star or a football star, right? I'm a sports athlete, but my sport is gaming. Now that's the first level. Now I'm playing in a tournament with other gamers, and that tournament is streamed live, just like we're streaming this live right now. Then I have an audience because that stream is going out to the computers of all of the people who are fans of me as a video gaming athlete. Now there's more layers. Those streamers are talking to each other. Those streamers are giving me donations because they like my brand or they like my style as a gaming athlete. Those streamers are buying virtual products, right? So now there's an entire economy being built on top of gaming. So it's the streaming economy. So I would encourage your members to think about video gaming is not just one kid or maybe older than a kid sitting in a room playing video games, Nintendo, by themselves. Video gaming is a whole economy now with layers. The athletes, the tournaments, the streaming, the audience, the community, and then the virtual goods. So the gaming and streaming economy is very, very interesting. So look for that. And
how
then
about space?
Space, let's do it. We all know that space is very important. We know that space is important for exploration. We go to the moon, we go to other planets. We know that space is also important for satellites because that's how we get our weather, our GPS, our communications. But what's happening now is there is industrial activity happening in the orbit. So not just the economy of launching something to space, so then the rocket, but now the economic activity is happening in orbit. And I just invested in a company around this, and I'm looking to invest in more. But the satellites need to be serviced, right? So they have to have companies that are going around and refueling the satellites, companies that are going around and repositioning the satellites in orbit. We have companies that are removing all of the junk from orbit, because now we've been going to space for like, 50 years, 70 years. So now there's lots of things orbiting that's junk, and it's broken down machines that need to be cleared out. So now we need trash removal in space. They're manufacturing drugs in space now, because in the microgravity environment, you can manufacture in different ways. So industry in orbit, that's what I would say. So it's not the old space industry, it's industry that's happening within the orbit, not just getting to orbit, but the economic activity is happening once you're already in orbit. So that would be my third one, in orbit industry. So computational biology, the gaming and streaming economy, and in orbit industry. Those are my three top ones.
Now we have question season. We have question season. And as a tradition of Changer Club, all good things needs to be pushed because people are hiding it. And I would like to give a stage for the first question to a very untypical member of our club, who is a pilot. Give a word to Geert, please. Geert, hello. Hi. Hi. First question, do you still fly?
Once in a while, maybe once, twice a month, something like that.
Fantastic. What is your question to Rob?
The question to Rob might be, there are, well, Arkadis asked you a question, which is the triggers where you will not or would not invest into the company, but what are the requirements or must-haves that you look for the startups to invest into them? Is it the founders, how they work together, what is their diversity, have they put in the money, or is the idea viable, or maybe something else?
Thank you. To summarize, Rob, what he is asking you, another difficult question, yeah? Could you tell us your 3 signals which send you the positive news? And please surprise us, it should exclude market, team, and a great idea, because we know it already. Rob, give me Rob. Rob, sorry, difficult questions today.
Yes, always difficult questions from Arkady, but I've got 2 of them so far. Let me see what my third one will be.
Two is good. Let me help you. 2 is good. It's fantastic.
I think that's actually the right answer, because I'm a generalist investor. I'm not only investing in robotics or only in space or only in gaming. So I think I actually try to keep the list you're asking me for. I try to keep it pretty short, because I want to be open to a lot of very unusual ideas, because that's a very important aspect also. The best companies, when they started, they looked very unusual, right? They looked a little weird, a little strange. So I think that's okay. So I think my list is not that long, because if your list is too long, you're going to filter out all the really, really great companies because they look strange in the early days. So let me give you my 2. My 2, one of them is actually about market, but I'm not going to tell you, Arkady, because you told me don't just say market. But there's a specific aspect about market that I think everyone forgets. So this is my specific twist on the market. I don't just want to see a big market. I want to see a company that can 10x in one direction and then 10x in a different direction. So a 10x on top of the 10x. So one of the good examples would be a company like Uber that 10x'd several times, and that's why it's worth $100 billion right now. First, they started with limousines, so long black cars at the airport, taking executives from the airport back to their office or their home. Then they went from limousines at the airport to limousines all across the city. So that's a 10x already. Then they went from limousines to all cars. So then that's another 10x. Then they started doing delivery of cargo, delivery of food, and self-driving cars. So that's another 10x. So what I'm looking for is if they can get this opportunity, because the key insight mathematically is that those numbers, they don't just add. If you take 10 and 10, it's not adding them. 10 plus 10 is 20. No, it's 10x in one direction and then 10x in a different direction. So it's multiplicative. It's 10 times 10, which is 100. So I'm always looking for the market behind the market, the 10x that comes on top of the 10x. So that's a different twist on market for you.